Let's talk about the implications here for the economy and economic growth, but not just economic growth, where we sort of stand in the economy. Paul Gruenwald is S&P Global Ratings chief economist, joining us once again from New York. And Paul, I say that because you say we sort of have to rethink GDP growth, right? More about quarter over quarter change and where we were pre-COVID and what we look like now. How is the stimulus going to affect all of that? I mean, it seems like it's pretty critical here and it's not getting done. Paul, you hearing it?
Yeah, right. Well, hi, Julian, and hi, everyone. Yeah, one of the risks we pointed out in our recent quarterly report was premature fiscal austerity. So if you look at the data, you can see that consumption subtracting from growth, investment subtracting from growth. About the only thing, not just in the US, but globally, that's adding to growth and adding to demand is government spending. So given that we're at an 11% unemployment rate in the US, given that we're going to be elevated above the pre-COVID level for many, many years, it kind of makes sense to us to extend that. So we don't want to get into a world where the government kind of joins the private sector and taking away from demand, because that's just not going to be good for the US. Our US economist last week put out a paper saying that the recovery scenario, the nice bounce we were baking in for the second half of the year, is now under pressure. So hopefully we get some sort of resolution to this sooner rather than later.
Paul, do we ever get, though, a permanent retraction of the stimulus in the form of, say, unemployment benefits on top of what used to be for people? When you look at the data we got last week on personal income, on spending, and how things were not quite as drastic as people had feared, and it was attributable to that extra $600 a week people were getting.
Yeah, one of the surprises that we've seen in the data since the COVID started is that household saving has actually shot up. So people are not only saving the government transfer, they're saving out of their income. So they're postponing, the durable purchases, the big things. Sometimes they can't spend because of social distancing, so services spending, et cetera, is down. But I think the trick here is to make sure that we don't have wasteful spending, and we've all heard stories about people who don't really, quote unquote, deserve the money getting it. So let's fix that problem, but let's not throw the baby out with the bathwater. The government needs to continue to support demand until the economy recovers. Unemployment benefits are a main channel to do that. So again, in our view, that's the way to go. These should taper off as the economy normalizes. That should be built in. But again, let's see if we can get over the current impasse.